So you've got a property investment, but you want to know how to allocate the costs. Can I offset it against my rental income, or do I need to wait until I offset it against my capital gains tax when I sell the property? A great question, and that answer will be in this video.
Welcome to our YouTube channel dedicated to you, property investors and property developers looking at UK taxes. Need help on US taxes? Well, join us at our PERSA tax channel, and there you'll find out more information to do with US tax advice. I'm Louise Misiewicz.
And I'm Simon Misiewicz. And in addition to what everything Louise has just said, we have got the first Monday of every month the Property Expert Panel, where you can ask me tax questions, but you've also got panel members to help you with legal matters, mortgages, generally property investments, and things like NRLA, which stands for National Residential Landlords Association, and LMPG to help you reduce your property costs. But in this video we are going to be talking about costs and how they can be allocated. There are two buckets indeed, where you have one element of costs that go against your revenue and another bucket which you'll have in capital. Confused? Well, let's just help you clarify that. Now, if you want to know more details other than this video, then why not read our article all about property efficiency and reducing your tax liability? That article link will be appearing just above Louise's head right now, or in the video description below. There's also a calculator to help you to understand what costs are allowable to be offset against either your income tax or indeed your capital gains tax. That link will take you to our website for you to download and pay for that tax calculator.
So, want to know more about us? Make sure that you hit the like button if you like what you're seeing, press the subscribe button and ring that bell to make sure you always get the latest updates from us. So, let's jump straight into revenue costs. What are revenue costs? Well, if we look at a typical property that would have revenue costs, the room presenting in front of you is probably a great example. These are expenses such as repair, replace and renew. Replacing a plaster, renewing paintwork, repairing perhaps even flooring. All of these types of costs are typically expenses that you can use as a revenue item to load against in-year incomes from, for example, rent. So these costs are going to help you with the closest tax bill you're likely to pick up on your rental portfolio. They're going to really help you minimize income tax, and income tax presenting most likely on your personal tax returns.
One question I've got for you, Louise, and it's something that some of our clients might have and listeners of this video, whereby they've got accountants that are generic in nature, they're very good at business, but don't know property that well. And they'll say, well, it's the first time you've had this property, so all of the refurbishment costs are capital. What would you say to that?
Well, I would say typically that's not going to be the case in every situation. In fact, in the majority of situations, it's not going to be the case. Where you have a repair, a replace or a new, then those types of expenses are typically revenue. So bear in mind, they all start with re, as does the word revenue. And that's really where they're going to help you, and help you from the first time you're paying for those things to be corrected or repaired on your properties. The other thing to keep in mind is that if you don't end up needing all of those expenses to reduce your incomes to zero, then actually you're not about to lose them. They carry forward to the next tax return to help you minimize your income in terms of what it's going to cost you tax-wise for that next year. Don't need it that year either? No problem. Keep carrying it forward until you come to a year where it does indeed help you minimize your tax. But what else might you face if an accountant is saying, as Simon suggested, that those costs are not revenue, they're capital? Well, let's look at what you've acquired that property to do. You've acquired it to rent it out. Is it in a lettable state? If it is, there's a very strong chance all those costs are still revenue. How do you know it's in a lettable state? One of the first ways you'll probably point that out is if you have a buy-to-let mortgage already on it. That would indicate it's ready to let and ready to be used for everything you bought it to do. So that is a great example of being certain that any of those repair, replace and renew costs that you're incurring on that very newly purchased property are going to help you minimise your income tax bill and not a capital gains tax bill, as your accountant might be suggesting.
So Louise talked about the first bucket, as I referenced it, whereby it's costs that you can allocate against your rental income. But what about those costs that are legitimately our capital? What do I mean by capital? Well, the first thing I would say is Louise talks about a like-for-like repair, replace, renew. And those costs will be allowed to be offset. But what if it's not a like-for-like? What if you're having a single let property, you're converting it into a HMO, and you're extending the kitchen into the backyard? Well, actually that's an extension. It's not a like-for-like replacement, and therefore it will be capital in nature. Do you lose all those costs? No, don't worry, you do not. What you will have to do is memorize that as a capital cost, and when you sell the property, it will act as a cost, reduces your gain, therefore you pay less capital gains tax. Don't forget that if you are selling your property, you do indeed need to get some specialist advice. We have created a video all about capital gains tax. You can see that link appearing above my head right now or below this video description. We've also created you a nice spreadsheet to make sure that you pay as little capital gains tax legally as possible. You can head over to our website to download and pay for that. Again, that link is appearing above my head and the video description. So have you got a property that you're not sure should be allocating costs against your revenue or capital, or indeed you're not sure which tax structure to use for your property investment? Well, don't worry, that's what we are here for. You can book a tax consultation with us using the code YouTube25 to get a 25% discount. The link again will be appearing above my head and below this video description. But if you're looking for a new accountant, we can indeed help you there too. Same link, just look for a time that's convenient for you.
So again, if you've liked what you've seen and you've not yet hit that subscribe button, pressed the notification, or indeed rung the bell, then this is your opportunity to do it. Thanks very much for watching. I'm Louise Misiewicz.
And I'm Simon Misiewicz. We'll see you again soon.